Hello, and a very warm welcome to this Open University webinar on the future of money. I'm delighted to be joined by colleagues from the Open University, John Killoe and Robert Herrion, and Ron Kalifa, author of the Kalifa Review on the Future of FinTech. My name's Liz Moody, and it's my pleasure to chair this event. In 2015, I wrote what I think was the first online course on FinTech in collaboration with Innovate Finance, the industry body, and a number of their tech entrepreneurs and some of their large institutional members. So it was very much a collaborative effort. I then went on to do some research with colleagues from the Public Understanding of Finance Research Centre in the Open University Business School. And we looked at the important role that financial services has in improving social mobility. So I'm really keen to hear what the others' thoughts on the winners and losers in the future of money. So without further ado, let me just briefly cover some housekeeping rules. Firstly, you should all be aware that we're recording this event, which is just as well because I think we're waiting for some other people to join. There might have been an issue with Eventbrite, so there will be a chance to listen again to this. There'll also be a panel discussion and before we then open it up to you to ask some of your questions. So if you do have a question, please write it in the chat box because we're monitoring that. And if you see a question that you'd really like asked, please like it. And that way we'll get a sense of where it is that your interests actually lie. So, Ron Kalifa, OBE, Chairman of Network International and Chairman of FutureLearn. But maybe most importantly for this event, author of the UK Government Review on FinTech. Would you like to get us started to put some context around our discussion this evening?
Yes, thank you very much. Thank you for such a warm welcome. It's great to be with you all here this evening, and hopefully for those that are going to watch this in due course as well. My name is Ron Kalifa, and as you might know, I recently chaired the review of UK FinTech on behalf of the government. The review was commissioned by the Chancellor in the budget in 2020, and it was formally launched in July 2020. Its aim was to support the UK leadership in FinTech, as well as encouraging the growth and widespread adoption of FinTech products. We started the review from a pretty good base. The UK's financial sector is often cited as one of its greatest technology success stories and is a leading example of our world-class innovation capabilities, and rightfully so. If you think about the data, UK FinTech represents about 10% of global market share, and it represents about £11 billion in revenue. Since then, even despite some of the challenges that we've had in terms of COVID, we've seen tremendous growth in the sector. In the first 6 months of the year, UK FinTech firms have attracted about $24.5 billion across 283 deals. This is the highest volume of deals on record. And the UK is consistently leading the European investment destination and is seen as that for FinTech, and it ranks second globally to the US. And by 2030, the estimate suggests that the FinTech's direct contribution to the UK economy could be as much as £24 billion. So based on these numbers, it sounds like we're doing a pretty good job, we're doing pretty well. So why was it necessary to do a review of UK FinTech? While we hold a robust position as a leader in FinTech today, we can't afford to be complacent. Competition is fierce from the likes of the US, Singapore, Europe, and other emerging markets. So, for example, out of the 3,700 or so IPO listings from across the world's major exchanges between 2015 and 2020, the US accounted for 39%, while the UK accounted for just under 5%. So when it comes to skills, the UK is also lagging behind, ranking 24th globally for data skills, 23rd for technology skills, and 19th for business. And it's for this reason, I think we've got to pay attention to the sector. And I felt that FinTech, particularly here in the UK, was not yet fulfilling its transformational potential. And while we've got strong cohorts of FinTech startups, there was, and it remains, scaling challenges. So the purpose of the review was really to ensure that we can attract and continue to attract entrepreneurs to not only start up their innovative businesses here, but also to support them to scale up, to expand internationally, and ultimately to list on our public markets. The review set out a strategy and a delivery model to move the sector from startup to scale up, because I don't think we've got a problem in terms of a startup culture. We've got a challenge in terms of scale ups. And when I'm talking about scale ups, I'm talking about Series C plus typically. And the strategy was built around 5 lenses. First was policy and regulation. Secondly, investment. Thirdly, skills and talent, international, and then finally, national connectivity. And the good news is that the public and the private sector have been receptive to our suggestions. The review was published in February of this year, and since then, considerable progress has been made. For example, the UK government has already committed to introducing a new fast-track visa system for tech scale-ups by 2022. Secondly, the FCA has already made steps towards implementing a strong recommendation around a scale box. And thirdly, the listing rules are being reviewed to consider how we can attract more founder-led and high-growth companies to IPO here in the UK. Liz, let me hand back to you so that we can then move on to some of the aspects that you want to cover. But I wanted to give you a feel and a capture for where we've come from. Thank you. Thanks very much, Ron. I mean, that's a very concise summary of what's an extraordinarily comprehensive review, which I have read. I would like to give the audience an opportunity now to meet my other colleagues here, as you've suggested. And I'd like to introduce you first to Robert Herian, Senior Lecturer in Law at the Open University Law School, and invite him to the discussion. Perhaps, Rob, you might want to say a little about yourself, please, and then where you're coming from, your perspective on this. And maybe we can start to address one of the first issues, which is around the payment systems and money. And from your side, from your view of things, what do you think we'll need to be? Where are we heading as the future economy moves towards being more of a digital one? So that's a lot to remember. I hope you got that.
I have indeed. Thanks very much, Liz, and thanks, Ron, for your introduction. And good evening, everyone. Yeah, this is a kind of a fascinating topic, a very germane topic, one that has kind of fitted in or fits in has elements of what my longer research program has really been for the last few years, which has focused quite intently on the development of blockchains and distributed ledger technologies. I mean, really within that, my interest really came in sort of the afterlife, if you like, or the imagined afterlives of blockchains beyond kind of Bitcoin, cryptocurrencies, and the sort of financial uses of those particular technologies. But nonetheless, those technologies themselves were completely predicated upon, future kind of developments of economy and money. So you couldn't really escape that, and it was all kind of bound up. And that's one of the things that I've certainly been grappling with over the last few years. So that's, I mean, in a real nutshell, that's what my research has been looking like, and has developed more recently into looking at specific sort of applications of data around some of these technologies as well. So to kind of go to the more specific question around sort of payment systems and future economy, and as it potentially moves to looking like more of a digital one, I think the first thing I'd say, and I spoke about this in the last book I wrote on data, actually, was that we're not really in many respects dealing with anything particularly new here. So I contest slightly the idea that we're moving towards a digital economy, when actually we've kind of had a digital economy of one sort or another now for decades. So, we can go back to the 1960s, to the growth of data banks, mass data banks, and the beginning of mass data collection. Banking was very central to that. So banks have been at the forefront of data collection, at the idea of moving bank accounts into some sort of computer-based data object form that we might now recognize as comparable to a kind of more contemporary digital economy. So we are dealing with a kind of a long tail in the development of what we might otherwise see as a future economy, one that we can kind of look back at least 50 years on. And from my point of view, I mean, even though I come from the law school, I come from this from a point of view of law, I think my interest and what I hope to contribute to this evening's discussion is some of the kind of more philosophical and critical questions, I think, which actually underpin a lot of Ron's work and a lot of the sort of the work and the interest more broadly in how we can implement a lot of these technologies. So, for example, the kind of how we kind of contrasting the move to a digital economy in relation to the future of cash, so cash money. So where, what happens with those discrepancies? And I know we're going to kind of come on to the question of it kind of inclusion and exclusion later on, which I think this speaks to. But obviously the other one, which is quite germane, especially to my research on distributed ledger technologies and blockchains, has related to the tension between centralization and decentralization. So I think these are the kind of the key questions which speak to kind of fintech, but also more broadly. So these aren't just questions of economy or finance. These are social questions as well, and necessarily kind of political and cultural ones. So yeah, that's a little bit of an introduction from me, and back to you, Liz. Thank you.
Thank you very much. That's a really excellent start, Rob. And I wonder if I can ask the same question now to you, John Keel, bring you into it. John Keel is a senior lecturer in economics and personal finance. So you're coming at this from I was going to say slightly different, maybe quite a different perspective, John Keel. And I wonder if you'd like to give us a little of your background, please, and your perspective on future payment systems and money in a sort of increasingly, well, unless you're Rob, an increasingly digital economy, please.
Thank you, Liz. Yeah, so a key part of my work at the OU is knowledge exchange, working with consumer and civil societies and industry. And in that role, over the last few years, I've been part of a forum that's been feeding the consumer perspective into the development of open banking. So that's the system that allows consumers to share their banking data with third parties and is behind quite a lot of fintech growth. So from that consumer's perspective, yes, there are undoubtedly good opportunities for consumers to benefit from fintech and the digital economy. But, we also have concerns, for example, around privacy, consent, safety, financial exclusion, which Rob has referred to, and vulnerable groups getting left behind. So I think, my background is economics, so it's a natural starting point for me if we think about the future of payments and money is to think about the core functions of money. So, there are three: medium of exchange, store of value, unit of account. Medium of exchange and store of value are very closely related. And both cash and digital money can fulfill those functions. And I guess the question really is, how well do they do that? And cash has performed pretty well for centuries. But as the economy is becoming increasingly digital, cash is definitely under strain. So while the UK government has recently taken steps to protect continuing access to cash, there's no requirement for retailers to accept cash, and that perhaps is what really gives the threat to the survival of cash. So Which did a survey recently, and they found that 1 in 3 people during the kind of height of COVID had been refused when they tried to pay for something in cash. Now, for the majority of the population, maybe that's fine, because more people are actually choosing to use digital payments. After all, they're easy, they're convenient. But nevertheless, cash is still the second most common form of payment. It still accounts for 17% of our transactions. but the use of cash did fall very sharply last year. So coronavirus has kind of contributed to that. So there was over a third drop in the number of transactions in cash, and there's been a pretty staggering rise in contactless payments. So if those trends continue, then cash could become increasingly hard to use and even disappear. I think the other trend that is really interesting is digital currencies, not because they've particularly caught on as a major way of handling our transactions for most people, but because the authorities have definitely were given a bit of a shock when Facebook said that it might be entering this digital market. It undermines central banks' ability to conduct monetary policy. So it's something that they're really serious about. And I think it's about 80% of central banks are now looking at a digital currency, a central bank digital currency. And earlier this week, we saw that the UK is now going to consult on introducing that kind of currency. So that might be the biggest change. You know, by the end of the decade, perhaps we'll have at least some of our money deposited with the Bank of England and be using apps or wallets to make digital payments from that account. But, you know, digital currencies, they create data trails. So that raises questions about who can access that data and how it's used. And some of the kind of misgivings about central bank digital currencies have been that, you know, for example, it could be programmed to expire on a set date if the government wanted to stimulate consumer spending, or that it could be programmed to ban spending on certain types of goods and services. And while that might seem quite far-fetched for the UK, it's certainly more plausible in more authoritarian regimes. So those are the kind of areas that I would say look out for: the decline of cash and these central bank digital currencies coming to the fore.
That's really interesting stuff that you're raising there, because I think this move from the bank, well, certainly in the UK, the Bank of England, from wholesale to retail is quite an interesting prospect, isn't it? So Ron, I'm going to come back to you to comment on this, because obviously you have perhaps more of a stake in the future of payments and in the digital economy. But I think from the audience's point of view, I mean, we've got a really fascinating discussion covering sort of everything from ethics and philosophy through to sort of consumer, the economics, even, you know, looking at the trade implications, skills, investment, and international policy and regulation. So all of these things still to come. Ron, did you want to just come back in with some of your insights on this same point about the future of sort of payments in this digital economy?
Yeah, absolutely. Thank you. I think you know, both Rob and John raised some interesting aspects. You know, we are in the middle of a revolution in payments. You know, banknotes, the most accessible form of money, is being used less frequently to make payments. At the same time, FinTech firms have begun to alter the market by offering new forms of money and new ways to pay. These sort of developments create both opportunities and, frankly, risks as well. They also raise a number of, you know, relatively profound questions around the future of money and what it should look like. I think there was a survey recently that I read, which was by Deloitte, I think it was, that stated that 76% of finance executives think that digital currencies will overtake physical cash in the next decade. Most of us would just read that statement and say, you know, so what? But I don't think we should think of it that way. I think it's a huge statement. And people in finance think that the financial system, as we know, is now starting to radically change. Let me try and put that in some context. You know, imagine that it's the year 2031, and you know, Abigail is a young female living in London, pulls out her phone to buy 2 Eurostar tickets from London to Brussels for herself and a friend. When she reaches the payment screen, she chooses her primary digital wallet, switching over her wallet. And you know, and she sees her digital pound balance has gone down. Nowadays, nobody holds cash savings, as loans can be taken out and paid back in a person's wallet. I'm exaggerating to make a point. in terms of 2031, automatically over time and based on the value of the assets that they own. So there's Abigail. She receives a notification telling her the carbon cost of her purchase and is provided with options and tools to offset this. So she receives another message, she opens it, and the money for her friend's Eurostar ticket is instantaneously back in a digital wallet. So in general, the payment transactions for her are faster, less costly, and subject to a higher security standard than they are today. So if digital currencies really do overtake paper cash, we'll be living in a radically different world, a fully digital world where data beats paper every time. Are we there yet? Not quite, but in over the last few years, electronic payments, as Jonka just said, overtook cash for the first time in the UK, and bolstered by the pandemic, the volume of electronic payments has continued to grow. It's interesting, what we have seen, I think, is COVID has accelerated digital adoption in ways that we would never have thought in so many ways in terms of the way we live our lives. In the first month of lockdown, 6 million people, 12% of the adult population in the UK, downloaded a banking app for the very first time. And in 2020, 1/4 of all payments were made via contactless methods. So we're increasingly seeing the momentum in most major jurisdictions around the adoption of central bank digital currency. And during this period, we've seen that the Bank of England has signalled their interest in CBDCs through various consultations, discussion papers, and as we heard earlier, many other central banks have also been exploring the concept. Most significantly and interestingly, the People's Bank of China have been developing electronic Chinese yuan for since 2014, I think it is, and it's been piloting its application since April of 2020. But Canada, Singapore, the Dutch, French, German central banks have also expressed their intent to explore the implementation of a CBDC in some way. So the level of resources that are now being devoted across the public sector to CBDCs or their private sector equivalents means that this isn't something that's going to go away anytime soon. And in fact, in his response to the FinTech review, the Chancellor announced a new task force between the Treasury, the Bank of England to explore and evaluate a UKCB, or what some have called a Britcoin. CBDCs have the potential, I think, to significantly change the payment landscape. If it's implemented thoughtfully, and they've got to be done in that way for obvious reasons, they can offer stability, convenience, and a speed of physical cash and the security of cryptocurrency. But yet, as with everything, there are some significant risks. Some will be technical, some will be political. How do we design a system that's not only sustainable, but that can also boost greener behavior? And I think it's probably right and timely that we're examining this for the UK and setting out our evaluation criteria. But what we do need to be clear on is that what are we trying to solve for? What's broken that needs to be fixed? And I think that's a question that we've got to keep asking ourselves when we start thinking about digital currencies. And I think we want the UK CBDC to be designed in a way that increases efficiency, lowers costs, and increases private sector innovation by providing new ways to make payments. So let me pause there, but I hope that gives you a sense of how I think about it.
No, that's really great. Thank you, Ron, and very interesting. Now, this webinar has been billed as being about the winners and losers in a future where financial systems are increasingly relying on that technology. So I hear what you're saying about the reducing costs, reducing friction, presumably, for consumers and others in it. But financial services is really it's the engine of an economy in many ways, and it employs a lot of people. And we still have this issue of whether or not it is, of inclusiveness or exclusiveness, whichever way you want to look at it. So I'd like to just move to our next question, or maybe come to you first, John Kill, by asking you if we really believe that digital inclusion is a prerequisite for financial inclusion. How can we ensure that we're actually closing that digital divide in the UK? Because it seems to be a widening gap if many reports are to be to be believed. So can I come to you first, Jonquil, on that point, please?
Sure. Well, the first thing I'd say is that financial exclusion happens for a wide variety of reasons, only some of which have digital solutions. But accepting your premise, and certainly digital solutions can be very powerful. So, for example, in many African and Asian countries, the mobile digital payment system has leapfrogged over poor access to banking networks and really addressed the problem of the unbanked. And we've just talked about cash dwindling. So people without digital access would definitely kind of be increasingly left behind and at a disadvantage. So yeah, access to digital communication needs to be universal. And on that front, there has been progress in the UK. So Ofcom oversees a universal services obligation that aims to ensure that everyone has access to decent broadband. It's quite slow, but decent broadband, costing no more than £46.40 a month. And Ofcom's most recent report suggests there are now only 134,000 households that lack that kind of access to the internet. But we can't make the mistake of thinking that's problem solved, because people might technically have digital access but still not be online, or be online and still not actually be kind of engaging digitally. And I know there's a lot of focus on digital education, that this is down to a lack of digital skills, but I think I'd flag up as well this kind of £46 a month for many low-income households. Paying that every month for broadband is just simply unaffordable, quite apart from the cost of having to have some kind of device, be it the computer or increasingly these days a smartphone, and maintaining that, making sure it's well protected with antivirus software and so on. So around I think it was about a fifth of non-internet users have cited cost as being the reason for not being online. And there are something like 2 million households struggling to afford broadband. Some providers do offer lower cost packages that are targeted particularly at households on benefits, so very similar to what we see in the energy sector. But really, this needs to go further. The take up is extremely low, and other providers don't offer any help at all. So that's an obvious area where I think that we need to see more advance. Interestingly, that survey that found cost was a barrier also found that I think it was about 2/3 of non-users felt they had no need or interest in the internet, and so that's why they weren't engaging. But the most recent Ofcom survey has found that it's now only 6% of households that are not online, compared with 11% before the first lockdown. So I guess some of those people who thought they had no need or interest for the internet actually discovered very rapidly over lockdowns that in fact they did have that need, and so they are now engaging. But it's a complex issue. It's partly about access to digital, but it's also about breaking down those barriers to using digital once you have the access.
Thank you, Jonquil. Very, very eloquently put. I mean, so we might have some cultural barriers as well as some. I mean, I do remember attending a conference on personal finance education, and somebody making strongly the point that actually where cash is concerned, many of the lowest paid people are the least wealthy people. They're actually very savvy at managing their money. So they don't need technological solutions to help them manage that. They just don't have enough of it. And so if we could solve that problem, then that would help. Rob, I wonder if I could come to you now and just ask you for your thoughts on this one.
Yeah, sure, Liz. I mean, I'm going to start with a point actually that was made in an article written by a colleague of mine in the law school, Claire Jones, about 10 years ago, I think, where she was looking specifically at financial inclusion. And in that paper, she made the stringent point that it can't really be decoupled from social inclusion, but equally that when we're talking about financial inclusion or exclusion, it's not a synonym for poverty either. So we're not necessarily, so we've got to be careful about how we sort of see those things connecting. But I think that the social inclusion element here is kind of key. I mean, for me, I think I wonder whether the notion of digital inclusion and actually to kind of draw on to put this in a frame drawn by Milton Friedman, actually, so to kind of go for some very kind of conservative economics here. I wonder to what extent we should really be reading digital inclusion as a form of economic arrangement, and because digital inclusion seems to inexorably lead to questions of financial inclusion. And I would push this kind of one step further to say that therefore we are actually asking questions of individuals in society now as to the extent to which they are including themselves or being included in the market. And that in itself is obviously comes with some issues, depending. I mean, these are kind of ideological kind of questions here as much as anything else. But equally, it's to do with, I suppose, interpretations of inclusion as forms of freedom or forms of choice. So to what extent is digital inclusion a form of freedom or a form of unfreedom? Perhaps in the sense that once you are inside, you have something of an illusion or a fantasy of free choice. But in actuality, you are merely sort of playing out what is required of you within that particular system or within that particular process. And often, and I've spoken about this in some of my books as well, and it was interesting that Ron brought up the point about, I think it was Ron, sorry, about the number of banking apps that have been downloaded. For me, a banking app is a really fascinating interface because it's user-friendly, deliberately so, but it's also completely veils the complexity of global finance that lives behind the banking app. So yes, you're able to sort of engage with doing sort of simple everyday banking tasks through the app, but really you're not qualified. You have no sense of what's going on in the world of financial capital that lives behind that banking app. And so I wonder to which, as I say, to what extent digital inclusion here can be problematized as actually an issue of unfreedom or a kind of a problematic of the illusion of free choice once you're sort of inside. But of course, I mean, as Jonko has raised, and I'm going to come to some of these points later on, actually, but they have already been discussed in relation to what access means. So what you need actually to kind of be able to access a lot of these systems, to be able to become a viable market actor. You can't simply be. You have to have various material technologies and tools in order to be able to do that, which certainly at the Open University and working with our fantastic students, we know that that's a struggle for a lot of people just to be able to get online. So it's, the tools aren't always necessarily there. So that, that's the kind of I suppose the real world harsh realities of this, is that the access isn't always as clear cut as perhaps people would like it to be in terms of the evolution of fintech. But then I do sort of insist upon this slightly more critical philosophical element here, which is actually, if you're being brought in, if you're being included, what does inclusion actually mean in reality there? So and I kind of would have plenty more to say on that, but maybe I'll hand over to Ron and we can kind of start a bit of debate about this, perhaps.
Thanks very much. Actually, Ron, it would be great now if you could sort of bring us in with your thoughts on this one. How do we, maybe bearing in mind the points that John Keel and Rob have made, how do we close this digital divide? Does it exist? Is it just a figment of our imagination? Is it down to us? Is it up to the industry to bring people in? I don't know. What are your thoughts on that?
Liz, it's always difficult to follow an economist and a lecturer when you have to kind of come to a point like this. Look, I think a very harsh spotlight was thrown on the digital divide during the pandemic. Let's just let's call it out as it was. As lockdowns kicked in, people turned to the digital world to purchase more goods and services online, and e-commerce share of global retail trade increased from 14% in 2019 to 17% in 2020. It's quite a significant jump. But for millions of others, it was a very different story. And if you think about the data from the World Economic Forum, the pandemic worsened the digital divide for the estimated 55% of the world's population that remains unconnected. Take that here in the UK, roughly 11 million people do not have the digital skills they need for everyday life. So there is a clear digital divide in the country, which is harming those who are left behind, and it's actually holding, I think, our economy back. So by 2028, the UK will be missing out on about £22 billion of value as a direct result of digital exclusion. So the problem is real, and it's pretty significant. And if nothing changes, more than 10% of the UK's population, British people, will be digitally excluded by 2028. And this group will be missing out on a wide range of opportunities and benefits. In the digital aid, I mean, Rob, you referred to the fact that the digital economy is already here. And when you think about the digital age, being able to use digital technology, it's quickly becoming an essential skill. And those that are not equipped are becoming increasingly marginalized in society and frankly in employment as well. In the review that we did, one way we approached this challenge was through the lens of skills and talent. In particular, we looked at how business in finance and tech sectors can support upskilling and reskilling to meet the needs of our ever digitizing economy. Within 20 years, in fact, I think it's going to be between 15 and 20 years, 90% of all jobs are expected to require a high degree of digital skills. And there are almost 400,000 unique tech jobs advertised in the UK over the course of 2020. That's nearly a 40% increase in 2019, despite the economic impact of the pandemic, yet unemployment is still high. And this is simply because of the fact that supply doesn't meet demand. If you take the specifics of the FinTech industry, by 2020, 43% of job adverts are seeking data skills, and 44% were seeking tech skills, and 35% were seeking business skills. But as I said earlier, the UK is lagging behind for this specialized talent. We rank 24th globally when it comes to data proficiency, 23rd for tech, and 19th for business. So I think it's essential that we can start building a workforce that is strong in these areas and that's frankly fit for the future. So one way to do that is collaboration between businesses and providers of education. And I think you and others will be key both to retrain and upskill adults who are already at work, but also to ensure that our young people are leaving the education system with the skills they need to gain a good job. If I can briefly just talk about two recommendations that were in the report. The first one was about retraining and upskilling adults by improving access to short courses. We reflected in the review on the feedback from many startups who shared that they struggle to invest in training due to the reduced capacity and budgets. Over 80% of UK fintechs are made up of less than 50 people. And this makes it really hard for employees to take time out of the working day to engage in learning. We therefore tried to make high quality and relevant courses that are both easy to access and easy to digest. Technology allows us to do that. So for example, throughout the pandemic, the big industry names such as Salesforce, Xero, Tableau, they collaborated with higher education providers and online education platforms to launch on-demand career-building resources in high-growth sectors. The second recommendation, or one of the other recommendations, was that to grow the pipeline of talent by supporting FinTech scale-ups to offer work placements to further education and higher education students. So the review shone a big, bright light on the opportunity that exists to better align our future skills with education. So we suggested that students could be brought closer to industry through work placements. That would not only help students gain technical and soft skills, but it would also allow companies to get early access to talent and train them according to their needs. And there are already some really good initiatives in the UK to boost the supply of talent, such as the Kickstart scheme, which aims to get young people into work by creating placement opportunities within businesses, and was set up, frankly, in response to the pandemic. So those are some of the things that I think are techniques and ways that we could try and help to do this. But this is going to be a marathon. It's not going to happen over a short period of time, but it will take effort on all parts to make this come to life. Thank you.
Oh, thank you, Ron. So, I mean, we're going to go on and talk about, we talk a little bit more about this really in terms of, do we actually think it's digital technology that holds the key to boosting financial inclusion, or is it more about finance education? I'm going to come back to you first, Ron, but I was just thinking back to the development of the course, since you were talking about skills to bring more people into FinTech and provide people with the skills to do that. As far as from my recollection in my research, talking to a number of the startups, the model was always that what was required was somebody with quite extensive understanding of the finance systems that underpin the whole, the whole financial banking, insurance, all the rest of it, all those different aspects of FinTech that have now sort of proliferated over the last few years since I've been sort of more integrally involved in it. And I'm just sort of thinking back to Rob's point on that. You can be given the digital tools to be included, but if you don't understand what's going on behind that, are you really is that what we're talking about, or do we need actual finance education? And it's maybe a little bit analogous to early days of personal computers. I have no idea how this laptop actually works. It doesn't stop me using it. It doesn't stop me benefiting from it. It doesn't stop me making my living by making the use of it. So for me, there's a fine balance between what we need to understand. But it seems to me to support the development and thriving FinTech sector is that it's actually not very clearly understood or very transparent how many of these finance systems actually work. So people aren't although it actually has implications for them, not very many people out in the street will understand what open banking is, for example, or what that means for them. So I wonder if we could just sort of move on, because it's not about me, it's about you. Ron, what do you think then? Is this, is it the technology that holds the key to boosting financial inclusion? Or is it more about finance education for these different groups of people?
Yeah, I think questions have been raised around the sort of risk that digital might contribute to exclusion. John Kill referred to it in some, in a way as well. So the so-called digital exclusion effect. Digital can exclude customers, but it can also enable them. And I think we've got to think of it through both lenses. FinTech, if I narrow it down to a sector, presents, I think, a huge opportunity to improve the financial health of the underserved. Financial inclusion is both a UK and a global issue, as I said earlier, with the significant numbers of unbanked, underbanked and over-indebted customers present here and, frankly, in the developing world. In the UK, there's around 1 million people who don't have a bank account and around 12.5 million people who have little or no confidence in their ability to manage money. It presents a challenge to both governments, who sometimes struggle to have an impact through policy and education, and incumbent financial institutions for whom servicing those customers is just not economically viable. Whilst it's a moral imperative, meeting that challenge is also and economic opportunity. And IMF evidence suggests that improving financial inclusion of citizens in the UK could increase the average economic growth. So FinTech by its very nature can reconcile this challenge by lowering the cost of servicing these consumer groups by, for example, by providing bank accounts at lower costs through digital channels, providing cheaper borrowing costs through sophisticated use of data, lowering insurance premium and reducing overinsurance, creating more user-centric customer journeys, and so on. So the financial inclusion opportunity also drives competition with incumbents who are driven to invest more, and collaboration opportunities, for example, with big tech providers who have significant data pools. So to ensure that no person is left behind, there is, and this is an ambitious goal, there's a clear need to coordinate approaches between industry, national and local government on things like digital skills programs and the availability of non-digital channels such as access to cash. So that's where I think the world needs to move to in order to try and address some of these systemic and societal challenges.
Lovely, thank you, Rob. Want to come in with that?
Yeah, thanks, Liz. Oh gosh, I've got so much. I'd love to reply to Ron on that. I'm kind of mindful on time, so I'll try and be as concise as I possibly can be. I'm just going to very quickly go back to this question of freedom that I raised earlier in relation to inclusion, and actually to echo Ron's example from China, which of course is an interesting one because China is so often criticised for its high surveillance of its citizens precisely through a number of these digital technologies, which Chinese citizens have to be included in. They don't really have a choice. But there is this kind of interesting factor here of a kind of a spectrum, if you like, of those who are completely left out of the system, those who are wanting to get into the system, wanting to be included, but don't necessarily have the tools to do so. Those who have the tools to be included are included, and sort of work vigilantly to kind of maintain themselves within that. And then the elite, if I use that word with a pinch of salt, but nonetheless, those who are kind of at the top end who don't necessarily have to worry about anything other than maintaining their position at the top. There is a kind of an interesting, in terms of inclusion, there is kind of an interesting link between those at the very top and those at the very bottom who appear to be free in the sense that they don't necessarily have to worry about inclusion. Those who are out of the system, they just don't, it's those sort of in the middle who I guess we're kind of talking about here, who we are, notwithstanding your suggestion that no one should be left behind. I still maintain that we are kind of talking about it as sort of a middle section of society, whether kind of domestically or kind of globally here, that we're trying to capture. And this is where the question of education comes in. And education here is in itself, I guess, slightly problematic. And I'm going to use a kind of riff on Liz's example of her laptop a moment ago, that I don't think we're talking about education here at all. And I don't think in terms of what you propose as skills development in your report, I don't believe this is education at all. I think it is a form of good design. I think we are talking about a form of design. We can see that in a sinister sense in the way that that we could be talking about some sort of social engineering. I'll park that. I won't go there just now. But let's stick with the laptop analogy. We're talking about good, sexy design. People like Apple laptops because they have a sort of a kind of a user friendliness. They have a sort of compatibility with people's cultural and social aspirations. They are a form of good design, which they are designed to such a high degree. And I kind of wonder whether education in this context, the financial education we're talking about to help promote forms of financial inclusion, is actually more a prospect of the development of good, sexy design. So that's kind of some of my thoughts on that.
Thank you, Rob. Jonko, I'm going to come to you, and I'm just aware of time. So please, if you'd like to come in on that question, we've got one more for the panel, and then I'd like to have something from the audience. So over to you, Jonko, on this idea of education and digital inclusion.
Yeah, I just like to pick up a bit on what Ron was saying. I mean, for sure, yes. FinTech, more granular use of data can certainly lead to greater efficiency, reduced insurance costs, whatever. But it's precisely those areas where firms are assessing risk, whether that's to do with insurance or whether it's to do with credit risks, that the risks of exclusion are also biggest. Some consumers will come out of the exercise as presenting with lower risk and will get better deals, but other consumers, come out as higher risk, having to pay more, or indeed being excluded completely. So that there are two sides to this what data can do for us. I think the other thing we need to be clear about is that the financial services industry doesn't have a spotless record, and it uses a number of tactics, as indeed do all industries, that aim to exploit consumers' behavioural traits. I mean, we talk about competition, and in an ideal world, yes, markets might all be perfectly competitive and drive innovation. But the fact is that if you're a profit maximizing firm, then actually you don't necessarily want competition. What you'd like is market power, and you do that by using tactics such as building a strong brand, trying to dissuade consumers from switching. You perhaps have complex pricing that makes it difficult to compare products, so that there are all sorts of things going on here where firms can exploit the kind of behavioral traits that consumers have, and big data increases the ability of firms to do that. Having said that, many fintechs have started up with the aim of solving specific consumer problems, and many of the apps that have been developed and will be developed are valuable aids to financial capability. That help to build up saving, keep track of money, and so on. And to the extent that those are there to help, they actually, I think, reduce reliance on financial education and are more efficient than financial education at driving good consumer outcomes. But yes, I agree with Rob that fintech firms have to step up to the plate as well, and good design is certainly something that we would like to see. Good design in the sense of driving good consumer outcomes.
Brilliant. Thank you, Jonko. We have one more question for everybody in the panel. I'd really like it if you could keep your answer as succinct as you can, please. I'm going to come back to you, Jonko. Don't go back on mute. The shape of banking is opening up. So it's shifting from a sort of very vertically integrated industry to a more open and collaborative infrastructure there. Do you think that presents an opportunity to boost financial inclusion?
Well, I'm not entirely sure that I agree with the premise. I mean, yes, we have got open banking and this opening up of data to other firms that can give value added to the data that, frankly, in the past, the big banks had to themselves and used for cross-selling, and it wasn't really necessarily the consumer who got the benefit of that data. But we don't really know how the big banks are going to respond. It's quite likely that they will take over some of these fintech firms, and indeed the big banks are developing their own, very similar apps and approaches. So for example, Barclays has got its own account aggregation tool. So I think it's a bit soon to assume that the big banks are necessarily going to roll over and move into this less vertically integrated world. They may just take more of the new industries, new firms that are appearing into themselves to consolidate their vertical integration.
Well, we've seen that in other sectors. I'm going to come to Rob next, and then give Ron the final word on this question. Rob, just quick.
Thanks, Liz. Just following on really from Jonko there. I mean, I would suggest at this moment in time we're perhaps seeing the possibility of banks shape shifting, but their purposes remain, I think, incontestably fixed. And on that basis, there is the opportunity for them to swallow up a number of the startups, and indeed a number of the startups probably wouldn't mind being swallowed up. I think this also has to be tied into where we are in terms of the kind of the radical aspirations of decentralized finance, of DeFi, which has, in recent years has been somewhat tempered by what Ron was referring to earlier, actually, which is the kind of the development of central bank digital currencies. So much of that radical aspiration, so much of the sort of the decentralization, the deinstitutionalization, the kind of the move away from these central traditional legacy systems, which we can trace all the way back to the Bitcoin white paper with Satoshi Nakamoto wanting to get away from these banking systems, isn't happening. We are seeing a consolidation around a number of the major players. Indeed, the major players have been in the mix all along, whether we're talking about major banks or credit cards and so on and so forth. So I think a lot of the radical aspirations of DeFi have really been tempered. So I think we're going to see a settling period now, where it's going to be less of this sort of this kind of, it may be kind of maybe an illusion of vertical integration or horizontal. But I think we are just going to see a kind of a settling back into something that looks a bit like business as usual. And I'm sure Ron is going to disagree with me vehemently on that particular point.
Or maybe he just hopes it won't, as I do, Ron.
It's difficult to disagree, because I think the reality is that we're going to see consolidation of a sort. It might not be in the way that Rob's described it, but what I think, and I'll do it very quickly, open banking has basically demanded a fundamental rethink of the traditional business model, and it's enabled banking to become much more customer centric. It's forced it because we're all living in a different way in terms of mobile phones and what we demand from our financial services providers. So I think what that will drive will be a greater collaboration with fintechs, and frankly enable access in a way that we've just never seen, empowering the consumer to make much better informed choices. So I think that, Liz, I'll do it very quickly, and I think that's the simplest way to put it.
Thank you, brilliant. I'm really keen we take one question from the audience if we have one, Lucy. Do we have a question? If not, I've been a very bad chair. I've let people run over, but it's hard to do digitally. Do we have a question from the audience? Okay, I'm looking for nope, I don't see anything there. Okay, what remains for me then, this has been an absolutely fascinating, from my perspective, exploration of what the future of money holds for us all here. So I'm going to go to the panel and just maybe just ask you for one brief final thought, so that we can conclude on time. So let me come to Ron first. Ron, your final thought. You're on mute, Ron.
My technological skills coming into play. Look, I think, I would hope and wish that we don't talk about something called fintechs as we go forward. For me, it's much more about the future of financial services, and that's essentially what fintech is for me. So we are living in an environment where technology and finance have created a fusion, and that fusion will continue and frankly grow. So I think the future of money is going to be very interesting, very exciting, for all the reasons we just talked about. And I think it presents opportunities for consumers, but also businesses to coexist in a way that they've never had, with the underlying denominator of trust. And that's what will drive success.
Lovely. Rob?
I mean, I think just maybe to defer to the title of this evening's webinar, really. I mean, in terms of the future of money, I think the future of money is absolutely imprinted with its histories, really. And I think we've seen so many of these dynamics play out at different points over the evolution of money and over the evolution of capitalism in particular. And perhaps especially since sort of the growth of industrial capitalism in the 19th century, the question of winners and losers has become all the more sort of acute. And so I think it's still on a sort of a kind of a continuing journey of discovery when it comes to that. And unfortunately, I'm not entirely sure the number of the technologies that we are talking about and that we're also kind of interested in or invested in are going to be solutions to this. And I think the history of money, and I think the history of capital in particular, has shown that it's perhaps far too complicated to solve. It's going to be a sort of a continuing iterative sort of design process as we move forward.
Thank you, Rob. John, I'm going to continue. I have actually discovered there is a question. There are a couple of questions in it, so I'll ask that, but I'm going to give John Kill sort of a summary piece then, and then I'm going to throw it open to the panel and see who switches off first or stays on, because we're running over time. John Kill, over to you.
Okay.
Thanks for your questions.
Well, yeah, I think for me, what's important is these are really very profound changes going on, and this is not just about the UK economy thriving. It's also about delivering real social good, and because of that, it's absolutely essential that consumers have a voice in these changes, that they have a real seat at the table where these decisions are being made about regulation and policy, not just the token one consumer that occasionally we get. There needs to be really profound consumer representation, that voice and perspective coming through in the changes that are coming.
Lovely summary. I just want to, if the panel are happy to stay on, there is a question. I feel we should put the question. It's come from Astrid. Thinking of the longer term future and potential climate change scenarios, has the digital economy and fintech industry considered how it will work with disrupted energy supplies which power our devices? Now, of course, disruption for fintech isn't an unusual thing. We've had, certainly in banking, we had a number of disruptions years ago with through hacking actually in customer data, which meant that I think it was the bank of one of the Irish banks and the Royal Bank of Scotland and others weren't able to process payments and manage accounts because of hacks. But this is another quite considerable and very topical one. Who wants to take that one first? With your indulgence, we're going to run on for another couple of minutes. Rob, do you want that one? I thought you got your hand up.
Yeah. No, I did. Sorry, I was struggling to try and unmute myself. I'm interpreting that as I mean, there's obviously there is an environmental impact of general kind of computer use. I'm assuming, is that what Astrid is kind of referring to here? I mean, that's the way I'm kind of interpreting. I mean, the interesting thing about this, of course, and I will bring this back, I guess, again, I will tie it back into the sort of the digital currency idea or digital money versus coins and paper money in cash, in the sense that they're what people think they are getting away from, perhaps when they move to digital money or to online, is some sort of material detachment. And of course, again, this is nonsense. We know that the only reason any of these systems, the systems that we're using now to talk to one another, the systems that can be used to power FinTech, are all incredibly energy intensive. They're also incredibly overly reliant material systems based on servers, undersea pipelines and wires. They are heavily material dependent, all of which has an environmental impact. So I think we have to be, and that's before we even get on to what has been the real elephant in the room in terms of cryptocurrency mining, which of course has been in the news in more recent years as obviously Bitcoin has increased in value exponentially. So we know that cryptocurrency mining is hideously energy intensive, but that's really to let off the hook so much other sort of digital infrastructure, which is in itself either environmentally or ecologically damaging or itself energy intensive. Does that mean that we just go back to sort of exchanging kind of coins and notes, or go back to wampum and using strings of shells to facilitate trade? No, it doesn't. But we have to be very kind of careful here that we are not in some magical dematerialized world where there aren't any environmental impacts.
Thank you, Rob. John Keel wants to come in quickly. Ron, will you want to come in too? Because I think this will be our final question. So, John Keel.
Yeah, I just wanted to say that you can't look at the energy consumption of the digital economy without also saying, well, what's the alternative? And the digital economy actually, is far more efficient than trucks shifting around huge bales of notes and so forth. So, I think you need to take that into account. The other thing that struck me is Sweden, which is further down the cashless society path than us. I think only about 9% of their transactions are in cash. But nonetheless, the Swedish government has powers to bring in emergency measures to require the acceptance of cash in crisis situations, which it actually defines as a situation of war or threat of war. But I think that's quite interesting that there are these kind of reserve powers there. Absolutely. That we might have to go back to something more tangible.
Absolutely. The last response to this. Thank you, John Keel. Ron, last word.
I think FinTech is making a huge creating a huge opportunity in terms of to the traditional finance sector, exactly as we just said, the others have said. Simple terms, removing the reliance on paper statements. That's a force mechanism, and physical bank branches by instead allowing people to manage their finances using digital technology. The reality is, though, is that we have got some way to go in terms of that. And obviously, it's not that traditional players aren't doing it. Of course they are. The big banks are putting a huge amount of effort into this. But the regulator, the Bank of England, for example, in the UK, has basically said that what they're trying to do is to ensure that all financial institutions, fintechs and traditionals, let's call them that, have to think about how they report what's happening to the environment. So reporting is one aspect of it. Another is how do they assess risks? And thirdly, how do they return on investment? So I think what we're starting to see is a convening by regulators that start to create a sort of coalescence, if you like, across the ecosystem where everybody starts to become accountable for a much more sustainable world, because that's what we're trying to build for the future of humanity. So that's probably a good place to pause in terms of where that is. But that's what we're all trying to drive towards. Thank you.
No, thank you. It's been a really fascinating exploration of the future of money and what it holds for us all here in this, certainly in the UK. I apologise to the audience that I didn't get through to a couple of the other questions there. My bad chairship. But I would like to very much thank you very much. Our panelists, our technical and events teams, Louise Clipson, Lucy Bland, Amy Sharp, and especially to you, our audience, for your questions, for your forbearance with the running over of time, and wish you a good evening or whatever time of day it is from where you're listening. Thank you very much and goodbye.